Hi dreamers! I was thinking about my dividend income stream and the fact that I've recently boosted 2 dividend cycles, but not the third. Check it out. So as you can see, I've boosted the January, April, and July dividend cycle. And the February, May, August cycle, you'll see, will be considerably boosted come August. Can't wait to show you that one. But the March, June, September, December cycle, I really haven't been paying attention to. And there's a potential that this cycle will become my smallest dividend income stream over time. So I decided to see if there were any stocks I might be interested in that pay out in that March, June, September, December cycle. And in my research, I did come upon a few, and one in particular that I feel like I have missed out on. So today I'll cover a new stock that I've added to my portfolio, and it's my favorite kind. It's highly regulated, there's a significant moat, it's low risk and volatility, and it has a long history of dividend payouts and growth. So let's get to it. So the company is Fortis, ticker symbol FTS, and it's an electric and gas company throughout Canada, the US, and the Caribbean. They have $60 billion in assets, over 3 million electric and gas customers, and almost $9.5 billion in revenue last year. Taking a look at where they are, about 37% comes from their company ITC, 20% from UNS, and 18% from Fortis BC. So here you can see ITC is essentially Midwest and upper Midwest states like Michigan, Minnesota, Illinois, Iowa, etc. UNS is the top half of Arizona plus the Tucson area. And Fortis BC is British Columbia, all around the Vancouver and Victoria areas. So now we know who they are and what they do. Let's take a look at their key numbers. Specifically, their years of consecutive dividend payouts, years of consecutive dividend increases, payout ratio, and CAGR. So here we can see their dividend payout going all the way back into the 70s, steadily rising over time with 48 years of consecutive dividend increases and payouts. That is so nice. And they're projected to have around a 6% average annual dividend growth rate, or CAGR, from now until 2025. And my typical goal on CAGR is to be above 5%. Let's take a look at their payout ratio. The payout ratio is always important because you want to ask yourself, do they have enough cash flow to pay the dividend? And here we can see that their payout ratio is actually on the higher side, above 75%. My ideal payout ratio is somewhere in the 40 to 60% ratio. But given that this is a utilities company, it doesn't bother me as much because they're often way higher, as the amount of investment needed for a company like this in terms of infrastructure and assets is usually pretty high. And one of the reasons why Fortis is high is because they are investing right now in sustainable environmental projects. Another thing I like to look at is the beta, which of course is a measure of how volatile the stock is. And here we can see a beta of 0.1, which I can't even believe my eyes. 0.1, I'm usually targeting less than 1.0. So a beta of 0.1 is extremely low and fantastic. We can also see that the dividend yield is 3.56%. And as you know, I usually try to target between 2 and 5%. So it's somewhat in the middle to high side for me. Now let's take a look at the recent stock price. And we can see back in April that the stock price was over $50. But recently that price has fallen down into the mid-40s. So I'm starting to establish a new position here. If we go out to a longer period of time, say 10 years, we can see the kind of chart I love to see. Low volatility, not big swings up and down, but in general, a nice float up and to the right. So this is not the kind of stock that's gonna knock your socks off, but it will be a steady grower and steady cash machine into the future. Time for some bonus content. I asked my Twitter followers what their favorite March, June, September, December cycle stocks were, and here's what they said. Enbridge, all about pipelines. Not for me due to environmental reasons, but many love this one for the high yield dividend, 6.22. Of course, we've covered Fortis, but that was mentioned many times as well. They mentioned BlackRock. It could be interesting. Down this year, but a great history of raising dividends. About 18 years of payout and at least 12 years of growth. WEC. It's a regulated natural gas, electricity, and renewable energy company, as well as non-regulated renewable energy. It's got a long history of payouts, 32 years and 18 years of raising the dividend, and it looks like they're in Wisconsin, Illinois, and other states. So it's a maybe for me, but I do have a lot of energy already. Next was Lockheed Martin, another favorite of dividend investors. Not for me, just because I try not to profit off of things like war, but it does have a solid history of dividend growth, almost 20 years. A lot of folks mentioned Home Depot, which is a solid company, great management. And I've had this one on my maybe list for a while. I don't love retail, but this is specialty retail, so I like it better. But it did get too high for my liking, at over $400 a share, so that's why I've held off more recently. If there's a big dip, I might pick some up, but it would need to come down to maybe sub 300 or sub 250 before I'd bite. The next one was Mondelez. Yeah, this one is nice. I hadn't put too much thought into this before now, but it's a stock that's up and to the right, and you know Mondelez. Oreo? They've got a ton of great brands. I could see this on my maybe list. The next one is McDonald's, an incredible brand and actually doing great marketing right now. And as you know, it's really a real estate company. But somehow I just can't get past the impact on the planet and animal welfare. Now, if they commit to a 50% plant-based sales at some point, I'm in. The next one on their list was Honeywell, another good one. The price has been too high for my liking, but has more recently come down. I could see this as a maybe. Another person mentioned AWK, American Waterworks, and they provide water and wastewater services. Now, that's always going to be in demand, but they do have a relatively low yield and 13 years of consecutive payouts, so this one is a maybe, maybe not, due to a low yield for me. Another one mentioned was Church & Dwight. I think it's a solid dividend, like 30 years of payouts and almost 20 of growth. Now, the price was frothy, but has recently come down into the 80s. I do love the low beta and volatility, but that yield is just so low. Cintas was another one on the list, and there is a ton to like here, despite the low yield. They have almost 40 years of payouts, and it looks like they switched from annual to quarterly payouts. But for this one, just know you're getting most of your return in the price appreciation. It does look like a nice long-term hold. Not for cash income generating, but more of a growth stock. And lastly, Sherman Williams. They have a really nice, long history of dividend growth and payouts, over 40 years. It's also a relatively safe dividend. It's just that they were way too expensive at over $350 during the pandemic high. That said, a better buy at under $250 now, and could be a long-term hold for anyone, just not going to be huge for generating income. So there you have it. I've put a few thousand in this stock to get me started, and I'll watch to see if it drops further and if the yield gets over 4%. And when it does, I'll definitely be adding to this position. I'm curious, what is your favorite March, June, September, December cycle stock? I'd love to hear about it in the comments. As always, I encourage you to do your own research, then implement and learn by putting it into practice. As a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.